Hello everyone, this is David Hybo from Forex Empire. Today I'm just going to do a little bit analysis just on Euro USD and see how we basically go step at a time to find the market maker pattern and execute it the right way. Now, what we see in here on Euro USD, the price kind of took a dip and created the lowest low possible on a 15-minute time frame. And create a nice W, followed by a nice divergence. Now, what is a W? A W is basically when the price creates a low and then basically goes back up and then creates another low, inducing a lot of traders to go short, but eventually the market goes back up. That basically is a W, but you have to know where it's forming and when it's forming. Not every W is a W, not every peak is a peak. It all forms in a certain levels of market conditions. So you just have to prepare for prepare your eyes in order to find these patterns in the market and execute it the right way. So what we've seen here is that the price did create a nice peak low, where the market also created the nice W formation, as you can see here, followed by the nice little doji that basically induced a lot of traders to go long, and that's basically where the market makers are sitting, and you can see the impulse right after. Zoop. Basically, that's basically indicating a lot of buy power at a click. There's no wicks, nothing, just a click of a buy. Now, these basically patterns are followed by the institutions and the market makers. No, there's a reason for why it's called market maker method. Now, what do you see here is the price. Today is Monday, Friday, Thursday, and Wednesday. So it happened to be Wednesday also, as you can see, midweek Wednesday, that's what we see it. Now, on the New York session, right about here is New York session, and actually right about here is New York session, and then around 11, the price just reversed. But as you can see here, a New York session, the price created a nice low, followed by a nice spinning top, and then another breakout, followed by a nice little doji. And then that's basically our entry point where you should be looking at the market for a buy. Now, once the market did its damage, it goes on following the pattern. But your job is to follow the pattern and execute, and then trade the other side of the pattern. Now, what we see here is a nice little W followed by a nice breakout right about here, and then the price consolidated right at the 50 and 200 crossover. Now, this is a nice level 1, followed by a nice impulse to the second level of consolidation, and that was right about here when the price decides to stop, make a high, and just consolidate. And it also known for, in other words, retracements. So when the price creates a retracements or consolidations, those are basically levels. Now, these consolidation can be formed anywhere. You just have to find them, trap them, and then label them. That's basically it. Now, you basically seen that when the price broke through this zone right about here, it created that consolidation. That basically identified us that it is a nice level 1 consolidation. Now, followed by the level 2, you can see that the price started to range in a wider direction rather than an impulse from here to here, it just straight upwards. But here you guys can see that the market was kind of creating a nice little consolidation on the sideways moment. And once that broke through, there was another impulse started right after, and that basically went forward, creating the M formation. Now, everybody knows about market maker, but not everybody knows about the patterns and everything. Now, what is a market maker pattern based on? A market maker pattern based on WVVM and MAAW. Now, you have seen that the market has created right about here. The market had created a nice W level 1 also known as V, and level 2 also known as V, and then the M formation. So WVVM, what is this? W, V, and a V, and an M. So also known as level 1, level 2, and an M. W, level 1, level 2, M, and then followed by MAAW. Now, what you've seen here, the market created a nice resistance point and a peak formation at the very high. As you can see on the RSI, the price was kind of overly bought, and among all the other previous structures. Basically, once the first leg of an M indicates you that the price is overly bought, you wait for the second run of the stop hunt. Basically, that's when the London session came out. That's when London session opened up, and that was Friday NFP last week. So what we seen here was a nice spinning top to the very bottom, very top, and then the price just collapsed. The reason being is basically it was a completion of the market maker pattern. So a market can go two ways. One is upwards, one is downwards. But within those upward and downward movement, the market maker creates these kind of stops or breaks just to induce traders to go long, short, collect orders, and then take off. That's the job. So now their job is completed. Their job is to trap all the sellers and go long, and then once the seller quits and buying, they short. Now, what you see here is when the price came to a stop and created the peak formation, you can also see that the price creating a nice little divergence. But a divergence always happens with an M, but a lot of times you might see divergence on levels of consolidation, but those are not the real M's. It also, basically the M's and W's has to be in a level count. If you're counting outside the level, then you're going to be wrong every single time. So it's very important for you to count the levels accurate in the right manner, and that's what we teach in our courses. But right now, what we can see here that Euro USD had created a nice M formation. What is the next step of the price to do? Basically, we look for a sell for the market in our favor, and that's basically sell. Now, once we shorted the market, as you can see that the price created that major impulse, and then right after that, you can see that the market created a trend line breakout and a retest. Most of the technical traders are trading right about at the level 1. As a market maker traders, we're expecting the price to reverse from the very top, and that's where our entries are most of the time. But as you can see here, the price create a nice level 1, followed by a nice impulse, and then a second level of consolidation. Now, what is the next step of Euro USD? So far, the market is at the level 2 consolidation, and the next step for the price to do is probably break below this zone. Once the price breaks below the 13727, that's basically the low from Friday, right? That's also known as a blue tracer. So once the market breaks below this, then you can expect the price to create a nice W. But it can happen today at New York session, or it can happen tomorrow at London session. So just keep that in mind, that price is it's just a projection, but it all depends on the time frame, the timing, and the level count. So the timings I kind of gave you guys already. It can be New York session today or London session tomorrow, but the W has to be weighted. You can't just buy on the time zones either. You have to match the time zones, the pattern, the setup. So once the price breaks below, for an example, if it does break below today, you can expect the price to drop till the 78.6 or maybe 61.8, maybe 88, maybe support. It all depends on how far the impulse is going to be. It can be a major impulse, just shot through, and that can be a ABCD maybe. Let's see. Yeah, that can be 88.6. That's an ABCD pattern. So it is, if it's a wedge, just like most of technical traders trade, it looks like a nice little wedge right about here. That's nice. That's a nice little wedge right here. So an ABCD completion should be around 88.6. And like I said, these numbers are based on technicals, but now as a market maker, I'm gonna look for the W formation to finish. So once that impulse has completed and a nice W has been formed around 88, and the W should always looks like this, a nice little low. The first leg always makes the biggest low, and the second leg makes a divergence. So once that happens and the second leg's on the price, does a stop hunt followed by a nice candlestick pattern and yada yada yada. But here you might expect the same results and same formation of the W. Once that happens, you're easy to trade without fear. Now, based on the timing, based on the W formation, it can happen today or tomorrow. So I'm just letting you guys know that how I see the market, and that's how basically you approach the market, and that's how you execute the market. That's it for tonight, guys. Hopefully you enjoyed it, and I'll see you guys next time. Peace out.